Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and we are here as the Theta Wave Traders that we are. Theta Wave Trader is not a person, it's actually a state of mind. It's getting into that right mindset, right? Trying to eliminate the fear, trying to find the setup, trying to find that perfect blend of commitment to the trade and follow through, without all that fear, without all that anxiety that we typically get when we trade, and you put it on there and it feels more like a gamble than it actually feels like a logical job and a place to actually put a trade with some confidence. So that's what we're trying to develop here. And we're developing that through the wonderful skills that Michael J Huddleston has taught us through the years. And that's the power of reading the charts. And I'm going to show you a blow by blow, minute by minute, how to read the charts with PDRAs in mind. And we're making sure that we can see that on all time frames. Any theories that we come up with, they've got to be provable on all time frames, all asset classes. If it's truly algorithmic, an algorithm that runs the entire market, then it's consistent throughout all of those markets. And everything that we see here should be found on all markets, all asset classes, in any time frame. And if you have a theory, and I have to apologize, this thing's going to be clicking off. I'm expecting my doctor to call, so I don't want to miss his phone call. Oh, this is going to be crazy. There's going to be lots of people. I'll keep that face up. Anyway, I wish you guys all the best today, and it looks like the markets are doing what we were calling for yesterday. We're looking for this big reversal. I like it. This was the linchpin yesterday, was whether or not we were going to close through this, because it was coming down into the, near the end of the day, it was coming through this inversion. And I was wondering, are we just coming back to the inversion to get long? Is this the April swing low? And then we opened this morning on the opposite side of it, and then we've proceeded to go down. So now I'm bearish on the daily. So we're not bullish yet. We're still bearish. We have to get, bullishness would have been coming back to that fair value gap this morning, opening on it, and then starting to march back up again, or run back down to the bottom of it and then march back up again. And we actually opened and gapped right through it and continued down. So the mean threshold of this down close candle is my next level. I want to see it blow through. If it holds off on that, I like these two open and closes here. If we can get a close below those, then we're going to run for these lower time frames. And this is now the support to go lower. On the daily, so we did get the reversal we're looking for on Thursday. Excelente. Wednesday was the high of the week. Now I want to see this push down. I want to see get right back into this stuff over here. We've already hit the mean threshold of this order block. We are in this reversal. We've come down, hit it, went back up to a logical level, which is this breaker right here. Last down close candle before run above these highs. We came right to the body, and it's right at a logical level where there was a little fair value gap sitting up there. It hit it perfectly. Now we've retraced off of it, and now we're heading back down again. So this is a logical level. Now, here's something that will kind of blow your noodle. If, and I'm saying if with a big caveat here. If this is some crazy retracement we got going on here, we're looking for a run back into this consolidation here, running out these lows. If this is the next price leg down, we're looking for 16,362. Not that that's a for sure, but keep that in mind as a potential downside objective. Right now, I'm looking for this order block to get taken out and us to continue down into the fair value gap below us here. And if we breach that and this mean threshold, then we have these other objectives to reach for. So this could be the end of the line. So that'll be interesting. That'll really drop the markets, and it will drop these. I've got some other ideas up here in these these EFTs and banks and areas I'm looking at that would support a big run down into here. So anyway, that's what I've got floating in my mind. I guess I should find out whether or not we're live yet. Are we live? Stand by. Yes, we are. Who's first through the door this morning? Tommy. My buddy Tommy's first through the door. Okay. Dave, good morning. Talk, Johnny, Ricardo. Good morning, folks. Good to see y'all. So let's get back into some of these other ones here before we get into looking for downside. Get into it. So all these people trailing stop losses behind here quickly ran up, took them out. Ooh, just made relative equal highs there. So if you trailed it a little tight, they came back and cleaned out this little pool of liquidity above us here. All right, let's march on here. Mean threshold of this candle. It is a breaker. It's a last down close candle before. Not really. There's no swing points in here, so it's just run back up. It's a mitigation block. So if we drive through this, come back into it, find a level of support off of that and continue lower, you're looking for where is that one going on the daily. Oops, wrong one. So we need to lose the mean threshold of this candle here before we run these run for this rejection block and old low again. And don't forget there's multiple PDRAs to look for in here. You have the mean threshold, the old low, and then you have that wick splitting to the quarters that Michael usually talks about. So you're looking for more than 50% close to continue going lower. And then that next price leg down. Let's see where that next price leg down would support. So the next price leg down will get you back into this consolidation here. So we're looking for at least this run on this liquidity here, long term. Well, for the rest of the week or rest of the month, it'll be interesting to see if it get down here. And if it does, then I'm looking for a reversal that supports this kind of reversal, not this kind of mess that we had in here, but something that kind of gives a nice clean reversal on the daily, and then we start running for up higher prices, running back up into these other fair value gaps above us here, which I think would be awesome into May. And here's our getting right back into this imbalance right here on the daily. Again, we've got this rejection. I'm sorry, we've got this order block here. Keep your eye on this area here. So just under into the rejection block and see what happens here. Look for 25%, take that wick, split that wick up into quarters. But right now I'm still looking for more downside on those guys. Dixie, just coming up into that little fair value gap that was missing there. We're just filling that now. I'd like to see that now just start to pull back. I'd like to see that start pulling back now. Right off that very spot. Now that it's taking out these little highs here on the 1 hour, it's like the turtle soup type of idea. You feel a logical fair value gap fill. You still have the mean threshold we could reach for, which is right about in here, which will put you back into so this is the line in the sand for me right now. I want to see this guy here and this guy here provide some level of support if we continue going higher. Yeah, those three there. 1, 2, 3. Got lots of people over there on the Telegram just chatting away. So for now, we're looking for obviously continued up prices on the American dollar, looking for reversal opportunities at this candle's mean threshold, this candle's low, open, mean threshold, old high. Any one of those opportunities to look for a reversal to continue coming back down. And that could be anywhere from now until we break that high. If we break that high, you're going to just keep going higher. For now, keep supporting the upside until proven otherwise, and you'll see the reversal happening, change of direction happening on the 1 minute chart. So that means more downside prices. I managed to catch a trade here last night on it's right there. Catch it off of a cam model entry. Did double entry here, then sold it up here. The 1,000 was like a penny or something like that. You have to put like 50,000 on there. When I used to trade Forex, it used to be like you put one lot on, and that was a ton of money to put on a trade. And these one is nothing. So you have to put 1,000 or 50,000 there to get anything out of it. So reversal right here. Body trades below it right there. You trade back into it here. Then this is what cleaned you out. It took you out there. So that was one of those nice reversals. News event came up, cleaned you out, and then continued down. Now, you don't even get an opportunity to get in off of this breaker here. It just came back, but just short of taking you in for a continuation on the downside. But it was a nice reversal until you got hammered right there at the open. So look for further downside until that dollar. So again, we may be running back into this fair value gap below us here. And then the next one I overshot my PD array. I was looking for this one up here instead of just running back into the breaker. Would have been just trading off the breaker. Because there was no fair value gap there, I didn't, like there was in the American dollar, or sorry, the British pound. There was an objective to aim for. I didn't. So, and left. I didn't even put a stop loss on there, but we're back to here. So I was looking for a long-term trade up here into the higher PD raise. If the American dollar comes back now, I really don't see anything for it to reach for on the daily. It's all been balanced here. Yeah, this is one of those reversals again. Body trades above it. You trade all the way back through into it, and you would have just been lucky to hold your stop loss. If the spread hadn't taken you out, you would have been just lucky enough to hold on to that to run back up for this breaker above you here, inside that big range. So I don't have anything for that now. You just look again, you're looking for a reversal to happen in the American dollar and all the other subsequent currencies. Came back up, filled the fair value gap, came back down. This hit our objectives from yesterday. Looking for a run back up into that inversion again. It did. Because we were sitting here yesterday when we opened, so we're looking for it to run back up into this inversion, and it did. I was hoping it would run through it, but we've got a reaction off of it twice. Now we're coming back in. Look for this fair value gap below you here. We could even run back all the way back into here, this piece here. So just keep your eyes on further downside prices on the foreign currencies. Japanese yen still pushing higher. And it's a lot of wicks going on, lots of manipulation going on there. What do we got in oil? Oh, look at this. You got a nice little reversal happening here in oil. If that closes above that, this would be a nice trade. Come back to this breaker here. Come back inside here. 1, 2. Yeah, I came back inside that one. I was hoping it would come back to here. If you get one that trades through it and you don't get a trade above the breaker, then you hope to get this one. If it doesn't and it just keeps ripping through the next one, then trade off the next one. Again, the breaker is not getting hit. So you're running all the way through to the old highs. This consolidation here. And that's where it starts, right down in here. So that's been hit. Premium array. That's been closed off now. Ugh, that would have been a nice little one to catch. Anyway, so let's get over here. So we're looking for more upside prices on oil. We got to get through this candle's mean threshold and this one. These combination of 3 of them here, this 3-minute one. Look for higher prices. And then you're just looking for that swing reversal. Once you break these old highs, look for a swing reversal to you can get yourself into something like this. This would have been nice to just wick down there enough to get in on that for a run back higher. Gold. Here's your reversal in gold. Body breaks below it right here. You trade back into it all the way up to here. Reversal, come back down. If you miss it, look for the breaker. So here's the breaker. Well, there's a swing here, I suppose. If you look at this one here, we've closed below it there. You trade back up inside it here to go short. If you chose this one, you trade below it, you come back up inside it right there to go short. So whether you chose that one or that one, you'd still get it. Let's say you waited for this one. You have a body here that trades below it right there, and you trade back up into it here, and you continue down. So any one of these three, if you weren't sure about them, if you're saying, no, it's gonna, I don't know if it's gonna go short, I'm gonna take this one. Oh, I don't know if I'm gonna take that one or that one. Oh, there's another reversal here. I don't know if I'm gonna, does it trade below that? Yes. Does it trade back inside that? Yes. Go low. Yeah, okay, I'm not sure if that breaker is, that's not even a breaker anymore. That's just a mitigation. Yeah, no, it's breaker. You broke that high there. So you have multiple opportunities. So now this reversal that you see happening here, if the American dollar starts to drop down again now, like we're expecting, then we should see this reversal happen, and then we'll continue back into the range, and you take your potential long here. Watch your gold and have a good little sniff around in there, see how you what you're looking for in this one. For run back up into order blocks, mean thresholds, old lows. Like, don't just take the whole range. If you do take the whole range and you pull your fib tool, you keep your stop loss down here till it hits 50%, then move to break even and pay yourself at 50, so on and so forth, if you're going to use that method. Banks, looking at banks to continue dropping lower. These ETFs, I thought that this would be the potential bottom, but they just cleaned out the lows here. I'm looking for down here though. Still looking for more downside. So, Bitcoin, our little Bitcoin friend right here. Reversal. Trades below it, comes back up inside. Low candle. Trades lower. Here. So if we break through this candle here, look for a return to you have to ask yourself, do you want a premium or discount run here? This one, or do you want to wait for it to come back into here? You have this run reversal here. You want to see a body get through here. Watch your Bitcoin. If you had a body trades through that, comes back inside, find some support at that, off of this order block or this order block. Look for higher prices. Pull your fib tool on the range. Do your 50, 62%, so on and so forth. Soybeans, I don't see anything in soybeans other than this little fair value gap here. Come back, find some support at that or the top of the fair value gap. Continue pushing for higher prices inside this range. Same thing with corn. Unless this is the run that comes up and it drives all the way through, comes back up, find support at it. Look for lower prices back into this gap. Otherwise, you're looking for higher prices on corn. Got a couple more minutes left. I don't see any swings in here. This is a reprice rebound. So if I see a price drop below this low right here, come back up inside this range here, then you could get short on coffee. Finding support off this order block. Back inside this consolidation, you've had an impulse leg break above it. So cam model 1 for higher. Cam model 2 would be right around here, 179.75. And if you close below that, then forget it. You're running for these lows and potentially back into this fair value gap below you here on live cattle. This is a really nice coca short here. I'm gonna say short on coca, just out of curiosity. Let's see if I'm right for tomorrow. Short right there. If we lose the mean threshold of that candle, I'm wrong, we're going higher. But if we hold that price right there and we continue going shorter, then we're looking for this low here to get taken out. Then I'm running for this, and you could get a significant reversal happening here. And this would be where I'm going to mark that right now. Further downside prices on lumber. Lumber at least 44.95, 41.95, or 491.5. Still supporting upside prices on lean hogs. Yeah, still upside on that. Reversal. I'm going to go one long there. Stop loss I'm going to put down in here. Ideally one more right here or down here. See how this body closed above this right here? And this one came in and went, doop, just tapped it perfectly there. You'd be in a long run up. You've got this one here. I'm either here, mid-level, or the low of it. So you want to see that if this does continue down, there's that mean threshold we're looking at. You want to see that mean threshold and those remember the open and close I was talking about? That's where that little level is that we're just sitting in right now, and we're seeing that potential reversal. So here's the open, and I clearly shouldn't be putting my trade on the open. Oh, it just swung below that. And didn't take me out. That's nuts. Oh, no, it did. So wrong choice before an open. So we're going to wait here now. See what happens here. So potentially the right idea, wrong time to do it. And this opening is what manipulation passed here, unless we're continuing to drive down. We didn't get the reversal. Did we break an old low here? Yeah, we broke some significant lows over there. Okay, so we're still going down. So we're giving this up, and we're going to keep pushing her. So the only saving grace of that one, if you looked at that as the reversal, the only saving grace is wait till after the open before you commit to this one. Because I guess logically, now that I look at that, and I'll screen capture this one later for journal entry, but when you if you see this and it's right before an opening, wait for the breaker to get taken to get your confirmation that we do have an upside run here. If it's before a logical time and price, right? Because that overzealous entry, obviously, it had further objectives to continue going down. And I've been calling for this further downside, and yet here I am trying to counter trend that just because I saw that. So run back up into mitigation, body breaks down below it, candle trades back up to it, right on the money, continuation on the downside. Morning, Dean. Did we have news at 8:30 today? Yes, we did. Lobo, good morning. Random question. How many monitors do you have? I have 1, 2, 3, 4, 5, 6. I got 6, but I use 2, 3, 4. I use 4. Mostly these two. I got my trades here. What you guys see here on the demo account. Over here, I've got whatever's happening on the channel and you guys talking. And then down here, I've got my other one for watching what people are saying on the Telegram channel. I don't have a lot of monitors monitoring multiple different markets. Like I know a lot of people watch the 3 main markets and look for SMT divergences and all that kind of stuff. And there's some guys that are really good at watching that stuff and picking their entries based off of those. So I'd like to get a few more charts or a few more screens, because I'd like to watch. I was thinking I need to watch like multiple markets, but it seems to work okay with me for the 2 that I'm on. And the 3rd one over here, what you guys are chatting about. Tommy's like, I made that mistake too many times. And remember, we can get a wick into here, and then the body closes above that and continues higher. Watch that candle now. Next hour, I'd like to see this return back up into here. The mean threshold of this to get hit, and then the reversal. I don't see anything dramatic yet for us. For us to get in on anyway. So we did get a reaction off of that so far. That fair value gap fill. And now we've getting a pullback, which is good. Now you see this high. We're talking about this as a turtle soup at a level that, you know, you'd be picking the highs if you were saying, yeah, there's a fill there. There's a likelihood I'm looking for a swing at that point for a reversal. So you look for a reversal setup on the hourly, 15-minute, whatever time frame you prefer to trade on. So there is one there, but it's really small. To look at this imbalance you see right here. Body trades below the imbalance. You open up inside the imbalance, continue down. If you didn't get that, you weren't sure about that, look for the breaker. That's not a breaker. It's a mitigation block. Trades back down into the mitigation. Continue through. So if you're still not sure, wait for this low to get taken out and then trade back to it. Then you can get a little more confident that that's a decent breaker you can get short off of. So now all these other currencies, look for their long right here. See how there's your swing. Bodies here, you traded back into it here. Now you're looking for long. So on your 1 minute chart, see how you've broken this. We've taken this swing here. Not a significant one though. I'd like to have seen that bottom one get taken out, but there's a swing here at low. Body's now traded above it. Right there. If we trade back into it, right there, that's a continuation to the upside. On the 1 minute. All these bodies actually did close above that high. So all this is just a return back in here to go higher. So you do have your reversal happening in British pound. There's a swing here, taking out this low. Gets back to the mean threshold of this candle. Body breaks the high of that, returns back to the top of it, continues on, takes out the highs. I'd like to see this get get back into this order block right here. 50% or more of this little range you're seeing here. I don't see a clean setup in there yet. This is its usual mess. So reversal. Swept these highs. Reversal. You don't get that one. there's this body drops below that candle there. You see that? And then it trades back up and goes boop and hits it perfectly for a short. See that? How we've taken out that high, creates that reversal, tells you I'm going low. That's the direction it's giving you right here. But it doesn't give you an opportunity to get back in. So the body trades below the mean threshold of that candle. Then this one finally closes below it and you go, great. As soon as this one opens up, if I get back to this, I'm going short. Inside this range here, you pull your fib tool and just look for 50% of that range. So if you got in short here, 50% of the range will get you to here. You move to break even, pay yourself a chunk there. If you finish off the rest of that fair value gap, pay yourself a chunk there. Like, it's not just these levels. Look for whatever's over here to support that 50. Because if this was just the only fair value gap and it was all balanced in here, and you suspected on a higher time frame that we might be going higher, that would be a great opportunity just to gather up your longs and go long. Balancing that last piece up, but you do have one here and one here, obviously. So this could be one of those. Just dip down into the discount range, run back up into the premium range, off that breaker again. See how we just ran up to it? And then if it runs back into here, smaller range, you want to see it get below here though. And that one are literally overlapping, and we have not validated this one yet, so we still have more upside. You're still inside this bigger range here. So until we get below this candle here, and through the mean threshold of this candle, this could be the next rundown. Price leg 1, price leg 2, back into the lower discount range here, which would be this reversal. So you're going from reversal to reversal. Premium, discount, like array to like array. So there's the return to that order block here. And now you validated this candle. So you're really between here and here, and you're sitting in the mean threshold. And it was only a wick that validated it. You like to see bodies validate these things. Wicks, technically, wicks are. So you want to see this really start slamming down here, through here, to continue on the downside. So if you're supporting the next price leg down, you want to make sure that that is lost, and you want to see this candle provide support. And if it doesn't, then look for this candle here and that fair value gap for the fill to run from premium to discount. Because what I'm in right now is I'm in this small range right here. So it's got to get through here and push lower for our price leg. Or it's got to get through here to push up higher to get into this next area of interest for me. So you're inside this swing right now. See how the mean threshold is right now holding price? So you're between here and here. That one's good. We now got a body below it, and you've got a little imbalance sitting right here. So now you want to see it start really pushing through to go lower. It looks like Nasdaq's finally made that return off of here. Reprice, rebalance. Body breaks above it. You come back. Didn't come back inside it. You just came to the... No, it didn't even come there. You just ran through it. So look for the breaker. Body breaks, trades above the breaker right here. You trade back into the breaker right there. You trade back into it one more time there. And you're going to go higher. But we're close to 9 o'clock or 10 o'clock, so I'm going to wait for a silver bullet entry to give us something. Where's the carrot? Ah, the carrot, the infamous carrot. So we've got to run back up into this. See how we're getting a reaction off of that level we were looking at? This reversal. I was hoping it was here, but it looks like it's this reprice rebalance, which is a sloppy way to give me a return, but beggars can't be choosers, I suppose. So if we even break through this one more time with a body, you want to see it dig down into here one more time, preferably back into here in a discount array. We want Derek's discount. Those are equal lows down there, by the way. Derek's discount gives us a rate on of 50% here. So you want to see it come all the way down into here, rebalance this, come back to that order block inside this larger range. This has been worked enough, so for me, you don't need to be anywhere below this mean threshold of this candle. Again, we're counter trending it. So not super clean for me, so I'm going to kind of sit and wait on it. We have a high taken out. You have a reprice rebalance right here. You're coming back inside it here for a continuation to the downside. So between this one here and this one here, you've got rebalance to rebalance. So which direction you want to go? Your overall bias is lower. So do you want to take this one for a continuation on the downside, or do you want to go counter trend with this one going higher? Rebalance, reprice, reprice, rebalance, premium discount, 50% of the range that you're in right now. Just watch it. You don't have to be jumping in on every little reversal that you see. Find one that really gives you a good support. And right now there's two narratives, long and short. So if you can go argue both directions, you should stay out of the market. So you get a nice confirmation about where you want to go. Wagwan, Darren. Looks like a clean price action today. Hope the markets treat us good after 10 a.m. news. Rafiq, I agree with you, man. Wagwan. Is that like a term of endearment? Is it like a greeting? Wagwan? Tristan, good morning. So we're back to this order block again. Sorry, I have to clean up my mouse here. My mouse is getting sticky, so I have to I like these little roly ball mice. They're so good. Oh yeah, they save your hands so much because you just use the thumb ball to roll it around, and your hand just sits really nicely on these. Love them. I got a bunch of different mice. This one's my favorite for sure. It certainly saves my hands. Much better. So carrot, where's our carrot gonna go? I can go up, go down. Still overall want to go down, I think. Let's see if this candle here holds price. It's a breaker, but it's a really weak one. So there's a swing right here. I wouldn't even really call that a breaker, even though that's a swing. It's just a run back into. It didn't even quite hit 50% for us yet. So we'll see if this candle here holds price again. Oh, other one we were looking at, oil. Was it oil over here? Look at that return. Right on the money. Reversal. Trade right back up into that breaker right there. Look at that. Perfect entry to go short. Boom. Right back from like array to like array that we were talking about. Done and dusted. You couldn't ask for better precision there, folks. We talked about that before it was happening, looking at this breaker. And we're talking about like array to like array. And there you have it, fully completed. Love it. You gotta love price action like that, man. That's why you gotta stay, find your particular asset that you like to sit in and wait for these beautiful opportunities. You don't need to be gambling multiple times. Find your perfect entry. And that is a perfect entry. That candle's low is 82.86. This candle's high is 82.86. Perfect entry. If you would have had it sitting on there, you would not have got it though. Your spread is 0.1. So you still would, you may not have got it. Even though that's when you're too precise. Damn it, you're too precise. But that's a reversal. Classic reversal. I'm heading down. It says, I'll give you one opportunity to get in. And off she goes. Price leg one, price leg two. Lovely. Came back, found support at that mean threshold again. Good to see. Continue on. That gives you a bit of buffer there now on that candle with this one. Body trades below it. We got this guy here now as well. Come back, find some support off these lows. Keep pushing through. Discount array. You've just hit 50% now. What's going to happen here? Body trade through it. Come back up inside it. So kind of watch how this is this area here now. Mean threshold, got to get through that. Give me a close on that. That's a trade below. See how this is a big long breaker now? That's down candle before it takes this one out here. It runs up, takes all that lot out. So you got to get way below this to come back up inside it to get some support. So you're hoping that you just get back up inside this range here. right up in there. We'll go short there. And the stop loss will go right up here. And we're really bouncing off of a key level here, so I'm just using this reversal as the potential for continuing my bias down. So Misha Carrot will go here. Don't take the same trade as me. You gotta have the apps. You gotta, this is, unless it's really falling into your idea of a perfect entry. It's not a perfect entry by any stretch. You want to see a cleaner one than this normally. See how we've traded a body above here now? I'm giving it some slack to move up to here. I'm gonna wait though. We'll see how this closes in the next 10 seconds. That's the little run. You're allowed a little bit of wick action up there. Wicks can do the damage. Now this is trading way above its pay grade. Mean threshold, that's it. So now I'm going to start chasing this back down, because it's going to go higher. See how this little fair value gap here, you've got a swing below the low. So that might be it right there. Yeah, it'll take me out. There's the swing right there. Continue to the upside. So this, you got one going down, one going up. This one's supporting going up. Body trades above it. There would have been an opportunity to get out cleaner, but I chased it too tight. But that's my fail-safe. How I have to try and manage my fail-safe. That's me chasing it down as opposed to just wait for it to come back now. Now this may continue back down. See how it's run below that low now. Still supporting this downside run. This is how you can get beat up in consolidations. So now we're below this again. So left the stop sign, no, that's my fail safe. You can say, well, if you just left your stop loss there, that's like saying ignore your fail safe and ignore a reversal potential that's happening here. Just because I'm basing this decision over here based on what we're seeing here now. To me, that's a logical thing. I chased it down. I have no regrets for this taking off on me now. I try to manage my fail safe as quick as I could for potential to go long. Our overall bias is still short. So now I want to see a breaker get taken out before I consider getting back in that, get back in line. So you want to see a displacement candle back in here with intentions of coming back into that. So now see how the breaker's mean threshold is taken. That's good. But I want to see that take out these lows, come back in, find some support at that candle's low. And now it's 10 o'clock. Looking for a silver bullet. Looking for the silver bullet. Wagwan, that's how they say what. Welcome in Jamaica. Wagwan. Okay, excellent. Thanks, Rafiq. So beautiful, great buffer on oil as well. Good morning, all. Morning, Derek. Happy Thursday, silver bullet time. Let's go, silver bullet. Getting to it. What happened in oil? Look at that, right back into this lovely order block, mean threshold. Oil is so much cleaner right now. Look at that compared to this. Do you want to be, which one would you rather be banging around inside right now? Much cleaner price action for sure. Much, much cleaner. Did that take out that high? What's the high on that? 53. 53, they're equal highs. That will get you all the way back down into here. So now that you've taken out this low, you don't want to see this high. You don't want to see this high here or this fair value gap here get taken to the upside. Otherwise, you're looking for these equal highs and back into this range. If not, you want to see this hold price. You can come up and touch the top of it. That's fine. Ooh. Or mean threshold of that candle. As long as the close below it, there's where your wicks do your damage. Nice snap off of that. Now you don't want to see that revisit it. Just start running around now and heading on down. See how you're inside this range here? This candle is now validated. And this candle here has been validated. So you're sitting between these two candles, this one and this one. You run back up into that candle's body and you run down into this candle's body like a quarter of the way through that one and a quarter of the way through that one. You go down to the 1 second charts, you'll see something else inside there. Just ran up, quickly took it and come back down again. Premium discount inside this range on a 1 second chart. That would have been like a rip up like that and then come all the way back down on a 1 second chart through 60 candles. So you want to see this here level of support right there. High hole silver. Are you talking about silver, Derek? Derek's on silver. He said high hole silver. It's some secret Masonic handshake to get into silver. Ooh, look at that. What is silver doing? 1 hour, 5 minute. Look at that. See, there's the reversal. Tells you price, I'm heading away from here. I'm getting the heck out of Dodge here. Here's your breaker. Wait for a body to trade below that breaker. Body trades below it. Wait for it to return back up to the breaker. Bing, right on it perfectly. Right there, and then smash away. So as soon as I hit that and it broke that candle's low, I'll be right into break even, zero stress trade. As soon as it broke down into these candles down here, I'll be paying myself some money. Give yourself some money here. And look at this big block over here one more time. A little pocket down there. So that would have been a nice 1 minute candle to profit. I don't know how much money you could make on that, but that's a perfect entry again. They're there, folks. They are there. I guess that's where you need multiple screens with like 4 different charts on each one of them. And if you know what you're looking for, you quickly scan it and go, ooh, I'm going to run over to silver. There's a nice little setup in silver there for me, right? So now you see how with bodies traded above it here. We've swept that low, bodies traded above. This one opened, came back down, tapped it perfectly. And now we're looking for a rejection block, old high, equal highs. There's your rejection block. So we were talking about that being this candle here and this candle here. If we body traded above it, then we're looking for these highs. So there's the body traded above it. You get an opportunity to get long right there. And there's your highs. So is it possible? How is it that we know that price action is going to do that? Well, based on these, did we take a low out? Look for a reversal. There's your reversal sign right there. These little wicks do the damage, but the body tells you the story. The body says, guess what? I'm going for these equal highs. I'm not going to leave those untouched, and I'm going to run deeper into this range. So, body, I'll give you one opportunity only because I got work to do. You can catch the ride. And now it's coming back up. Look for this order block here. Dig deeper into this range. Look for that breaker right up high. This little imbalance, that little imbalance right there. There's another imbalance up here in the larger range, but right now you're inside this range. If we can get back down into here, there's your silver bullet to go along. Continues to support that wick theory here, that mean threshold, and those double open closes here. And we have a higher low, lower low. So we have a short-term swing point here. So if we can get back into this for a long, back into that fair value gap above us again, that would be a nice little entry to go long. And it's one of those ones where you go, so what if I can't get in on this here? Do we have a breaker? We can actually get a trade off of a breaker. Here's a breaker right here. Here's a breaker here. That one takes out that low. This one takes out that low. Body trades above both of them. Returns down into one. Returns down into both of them right there and goes higher. Carrot. Wishful thinking on the carrot. We have, look at that, right? See that reprice rebalance? All the way back inside it right here. Continue to the upside. Right on that big swing down, all the way back, fill. Bodies are respecting the inside of that reprice rebalance and continue going higher. That's the one that fools you. Are you in? We got another one going long. Takes you up, takes out your stop loss if it was sitting here. Takes that low out as well. Yeah, you can get beat up in that one. So now you're looking for a silver bullet entry and you're not getting that either. So what are you getting on your other time frames here? There's the 10 o'clock. Look at that nice low. 10:03, 10:04. Still, there's a silver bullet here. There's a silver bullet here. You just can't get in on any of them. So look for a breaker. Body trades above it here. You still can't get in on it. Yeah. Getting a nice reaction off of that now on the daily. That's good. There's your reversal on the Dixie. See that right there? Body trades below it right here. You trade back up into it here for a short. So here's your, if you're not trading the US dollar and you see this reversal and you go, okay, so now I can look for my entries on the pound and the euro to go long now, because I see this change in direction. We've taken out a high, we've got a reversal, change in direction, body trades below. So I'm not expecting this to take this high out anymore. It's saying, hey, look, I'm going down. I'm giving you an opportunity to catch the bus. You're going to run. We're going to take off on you. Runs down below the breaker that takes that out, comes back up. Doesn't even give you the breaker for a return. Just short of it. Just said, nope, I'm out of here. So now you can start saying, looking at your, as soon as you see that happening around the 10 o'clock time, you start saying to yourself, what opportunity do I have in my British pound to catch that swing point? So then you go over to your British pound, the 1 minute chart. What's this? And you see this gigantic hole sitting right here, right off a swing, off of an old low. And you go, oh, if we get a body break that, that'd be great, right? If a body breaks this one, and it does right here, then you go, great, now can I get in on that? No, I can't. It runs through the second one, runs through the third one, right there on the body. Closes there. Then you go, okay, can I get in on a breaker? It finally runs above you. No, you can't get in on it anyway. So you might be looking for something to get in on if it comes back into here. Take it out that low. This one here. No, that's a mitigation. No, it's a swing, I suppose. Old highs. This is equal highs. So maybe if you can get back into old highs here, it's in a premium. So do you want to take that with all these little gaps sitting below you? That's entirely up to you. What about euro? What did euro give us? Did it finally give us something down here on the 1 minute at 10 o'clock? Here's the 10 o'clock reversal right there. Body trades above it here, runs through your breaker, this big ass sucker right here that runs all the way through and takes out that low. That's the big one. Body trades above it. You come back to it. That's the only place you could have got long right there. So we had to kind of endure all this morning to continue going higher. So that trade's still good. And we're still going lower. Okay. This chop cheese grater stuff here. Not very clean price action for sure. What's our beloved oil doing? A high. It finally took out the high, those equal highs that we were looking for. Took them out, created this reversal. See that? And then the body trades below it, runs all the way through it. You don't even get an opportunity. Oh, look at that. Watch right here. So that's the high. The high is 45. The open on this is 45. So they're the same. What's the close on this? 45. So you don't get an opportunity to get in on that. It just runs all the way through. So you look for the breaker that takes out those that high. And that would be this swing point here, I guess. You could go for the beefier candle. When it takes out that low, trades back into it. Yeah, no, that would not be a breaker. This is the breaker right here. So no, you have to go with that one. It takes that out, comes back to that, then you can continue going lower. And you're looking for just a return back into down here somewhere. A fill of that fair value gap below you. Look at these banks. Told you, Gary. You weren't listening to me. But whatever. I kept saying it was going to go down. You kept saying, no, it's going to go up. I'm like, no. But anyway, doesn't matter. Not that clean in here. Do you guys see anything clean in here, Derek? He goes, no, silver bullet, bro. I don't trade silver or gold, but I can sing it. Like Burl Ives. Some of these guys won't even know who Burl Ives is. It already ripped up into the formula fair value gap. Let's just see what it does here. Above equilibrium of the current. We would be very nervous to take something long on any of these indices today. Christoph. Hi, ThetaWaveTrader. Daily tape reading on natural gas. Thanks. Oh, the nat gas. Is this NG right here? Natural gas. So this is daily. You want the daily, or do you want the obviously we're still going down. Let's look for 1 hour. See where we see these reversals. See, there's your reversal here. Took out the old high, big reversal. It runs down. There's your overall breaker that runs up above you. Body trades below it. You don't even get an opportunity to get short on that. That just leaves town and says, I ain't giving anybody a chance to get on. I am out of here. So it just leaves. That's your big breaker. So unfortunately, you do have a potential reversal here, though. You've taken out these lows. We've got a nice snap up with a body that breaks above it. You've returned all the way back into it. This wick, you do not want to see this. You want to see this hour close above this. Then that's a potential for a run back up with a low, with a stop loss sitting here. If you lose the mean threshold on a close out your stop loss before the run higher, or before it takes you up. You don't want to see a body close below that level right there. So it can come back. This is where your wicks come into the mean threshold. You see that? the wicks coming to the mean threshold there, they could do that and then leave. As long as this candle here on the hourly closes above that level right there, I'm still bullish. I would go bullish on that. And that would be your perfect entry, because if it's wrong and it trades down below it and then trades back up into it, you can get out there as a fail-safe to go short. Now let's go down into the 15-minute. There's your 15-minute reversal right there. Body breaks above it. You haven't got a chance to get in on it yet. And here we are, just coming into it here on that candle. We're getting a nice little snap off of it. We're getting another little fair value gap here. You want to see that break to the other side, become an inversion, find some support at it, and continue pushing higher. So this one can run all the way down into that last little spot right there, which is on the hourly just below that mean threshold. So if it runs down into here, that's what you allow. Depends on what time frame you're trading on. For the 15-minute now, you're looking at that there. 5-minute. There's your 5-minute one right down in here. So you can allow it to come down to 161.17. And then your stop loss is super tight. You see that? Your stop loss is super tight. So if it takes that out, then it's obviously going to run right through that. Then you go down to the 1-minute. There's the reversal. The body traded above it right here. We traded back into it nicely right here. You're running all the way back up inside this range here, back up to an old low, equal lows, taps them beautifully there. You don't get the full fill there. You do get these multiple lows. So that is a key level. It hits it perfectly. You wait for a reversal to happen. Here's your reversal right here. Body breaks through it right here. Right there. You trade back up into it right here. Continuation from like array to like array. There's your entry. Exit down in here. See how the body is closed below this now? Then it traded up above it. So now you're short, long. It's come back inside it one more time. So now you want to see that continue back up. So this would be like an entry long here. Not that I'm not super keen about it just because it's banging around sideways here. And you don't want to be relying on ones too far back there. These ones that are clean up close are nicer for me, but if you're just going by the standard rule, then that's your long and that's your stop loss sitting here or down here. If you lose that again on the close, you're out. Move to the sidelines and wait for a better setup in your 1-minute chart. Or if you're back to your 5, stick with your 5 and say, if it gets back down in here, what's that, 61.1? 61.1 would put you below here. That would take you out. So what time frame do you want to trade on? That 61.1 is your all-time low you're allowed there. 15-minute. What's this here? It's 61.14. 1 hour is already through the 1 hour. So there's fair value gap sitting inside this key level, which is your make or break level in your with wicks. You've got another 34 minutes for this to make up its mind what it's going to do, and it may do it down here on this 15-minute or 5-minute chart. And we're coming into the bottom of the hour now. So you want to see a swing form here. It'll be right around your 5-minute. So anyway, there's your natural gas. No, not yet. Still thinking lower, so we can just went above the 5-minute fair value up on NQ above the high. Would like to see it all turn here and give us an entry bearish. If not, just watching on the sidelines. Removed a 1 minute high and equal highs, almost new day opening gap Wednesday. We'll watch to see if this gives us something here I'm looking for. A fair value gap down to enter, otherwise watch. I agree. Look for these old equal highs up here and a fill of that fair value gap above you here. That 5 minute fair value gap sitting here. We haven't really taken out any significant highs, so this is kind of the part that bothers me, is that we still have this breaker. The line in the sand is the breaker on the 5 minute, the mean threshold. And that will put us right at a close on the 1 minute chart in here. If we go for the just up to the mean threshold or just above it, digging into it, that'll give us a full fill of this. And it gives us that little reversal you got going on here above these highs, which I guess you could consider this as part of running all of this lot out. So let's see what happens up in here. And this is so choppy right now versus something that's so much cleaner. There's that reversal again. Body breaks above it right here, and you trade back into it here to go long. I think I should just stay in oil and see if I can find something down here. This seems so much cleaner to get in on. We've seen multiple entries for oil here this morning. You guys trade oil? I can't trade it on my live account, so I just want you guys to see some really nice clean entries, these clean reversals like this. See that little body there? Body trades above it, and look, watch this. Burp, right back into it with some nice precision. You tippy-tappy it, and you've made like, that is a huge killing there at 62,916. 63. It's almost $1,000 run right there in Bitcoin. Crazy. And if you just trade from inside the array that you're at, so if you catch this one as a run up and you're trading inside this range here, your breaker's sitting right here, you trade right to your breaker and you get out of your trade. You wait and you see this thing here and you go, ooh, Nelly. If we start trading below that, you run back up inside it here. So you'll see that that one actually closed below it. So if you bought in at 1, 2, 3, 4, 5, 6, all those potential entries, you would have got any one of those there, and you're aiming for your first low. You take that low and you're looking for that candle to get taken out, and you go, great. Then all of a sudden you see I've run below this low here. I see this fair value gap forming here, and it runs above you, and you go, ooh, now I've got a reversal, and I've got a reversal. I'm trading from one to the other. That one candle there should have taken you out if you're moving your stop loss accordingly, and you're closing your trades out or taking portions of your trade out and moving your stop loss every single time you come back and take some profit. You pay yourself. There you would have been taken out, but you would have got some profit out of that. So then you see this reversal here. You don't get a chance to get in on it there. You don't get, so you look for a breaker that takes out this range here, takes out that low, trades above it with a body, trade back inside it here, run higher. Inversion right there. You don't get a chance to get in on it again. reversal. Did not follow through on the reversal, so you don't get the reversal there. It continues up. Reversal here. You don't get a chance to catch that one either because it hasn't been validated yet. Then you have this isn't a really I guess you could say it is, but relative equal high. So just remember they won't leave those untouched. You get it. Fair value gap now becomes an inversion. Look for this candle here. It's a mitigation block. It does not take out an old high. You trade down below it. You come back up inside it right there. Perfect entry short. And you're looking for this mean threshold to get taken out. These old highs here. Relative equal highs is my next area of interest. Thanks for natural gas. You're welcome. We will see in the 1 minute. If you're targeting a breaker, do you go for the breaker body or the wick? That's your choice. That's like this fair value gap. The way I kind of look at that TP is we have 3 different entry points. So you have 1, 2, 3. So you have the bottom, the consequent encroachment, and the high. Those are 3 different PD arrays. No different than a breaker. Has its low, its open, or its low, its close, and its mean threshold. You decide inside there where you're going to put your PD array. You want all 3 of them, 1%. Well, then you put your stop loss up here at 1%, and you take all 3 of them. If you like, I want to be super cautious and say, I'm going to take the mean threshold because if it trades above that, I'm using my fail-safe right here. So if it trades above that, comes back and taps it, I'm out because that mean threshold is the line in the sand. I don't want to see that lose it. Then you got to give yourself some wiggle room and say, is it just coming back to tap this fair value gap before it goes lower? So there's some wiggle room you have to give yourself. There's some play you have to develop around your own fail-safe. I have mine. You guys will develop your own. I just gave you the idea for the fail-safe, what you do with it and how you hone that and how you give it some wiggle room is entirely up to you. And where you trade in your breaker is the same 3 PD arrays as you would inside a fair value gap or an inversion fair value gap or a gap or price imbalance. The same 3 PD arrays exist for all 3. For me, it depends on the situation. Experience will help with the decision. I typically mark the entire breaker. Well, yeah, you definitely have to mark the whole breaker as your place that can come back to. But anywhere inside those 3 PD arrays, you still have to establish which PD array you want to trade to. And sometimes it depends on the body, right? When you get this big, like for example, this breaker right here, when you see a body go ripping through it, if you saw this one go rip right through and then you eventually see candles come back and just tap it, I'd be happy with just a tap. But if you see this, it's chewed through the mean threshold here. Tap, tap, tap. It's coming back in. It's inside that inversion. It slowly gives way. We have a body that trades below it right there. And you don't even get a chance to get, oh, I guess you get in on this one here. This little guy right here. That's your breaker. Last down close candle before run above an old high. Michael prefers the beefier candles because they're relatively equal, but that's the swing point. Take that swing point out to here. Body trades below it, pops into it one more time for short, really tight. So you'd have to take the wick there. So you'd be 1, 2, 3 PD arrays. They're almost overlapping. So it's up to you to decide where you want to put your entry, I suppose. If you look at this breaker right here, this large candle for the run below this low, 1, 2, 3, you would have got all 3 of them come all the way through, and it would have eaten right through to the other side of it when it's really coming back into this discount swing. So if you did put that there, you'd still have to put your stop loss down here. because you're still inside this. You're looking to reach for into this or take the breaker. If you say, well, I don't get a chance to catch that one, well, I'm going to take the breaker as soon as it comes to it. Right here, you have to endure this whole run back into the premium or discount. And it ran back to here after all anyway. So if you took that one, you got to be willing to hold out. And then your line in the sand is that guy right there. If you trade below that point, it's running for your breaker, or sorry, running for your low. Now, if you got this and you missed it, you say, well, I want to run for the next, this one doesn't take out any swing points. So that becomes your mitigation block. Body trades above it. You're inside your mitigation now to go higher. There's 3 arrays inside that as well. I suppose you could take the high, the open, the middle, and all the way back to the low as well. I guess it'd be 4 PD arrays inside there. Hopefully that's kind of clear though. And Q's moving now, he says. Yeah, there's a swing right there. Jeepers, that's sloppy, sloppy. Body trades below it. You don't get a chance to get in on it. You don't get a chance to get in on it. Unless we get this here. Not really a premium. Look at that. Just popped up above it right there. Just enough to clean that out and just tap that fair value gap. We've come all the way back down into old highs. I want to see this get blasted through because you want to see this to be the next price leg down. If not, this isn't clean for me either. So yeah, I'm not convinced that's finished mucking about up there. You got to lose this mean threshold here for this to be the next price leg. That's looking better. This candle here now would be my get below that with a big strong down candle. And even get in on any one of these. None of that stuff was not clean for me, not clean at all. Are you looking at ES there, Derek? You're looking at 17,333. Body gets below it, trades back to it, right? Oh no, it's, yeah, I guess you're pretty close. There you go. Now you've hit it. Now you want to see this I want to see it get through here. So that is a fill. That little next price leg would fill this fair value gap down here. So return back into. So you've taken this swing here. Watch this and this. So if we close above this, then look at this as a swing point to run back up into this range here. See how our bodies are just running up hard here? That little breaker there has to hold price. And if we close above and we don't just tap it and snap off of it, we sit on that. See, it's already digging into it already. This one's open, this one's open. So basically it would be like, can I get in on this? Nope. Can I get in on this? Nope. If I get a body trade above this, take the breaker and run up higher. There you go. See how it's coming back into it? We've got a body traded literally on it. So we're looking for more higher prices, I think. I don't think they're done up there. First little chew into the mean threshold. See how they're not giving it. It's not just like snap off of it. They're up there digging into it. Chew, chew, chew. And then it says, okay, I've weakened it enough. Come back into a discount array, grab it, and then slam through it. It is holding price. There's the third, another attempt to get through it. See how we've dipped back into that range? First one, ignore the first one. It runs into the second one, trade it above it, trade back into it, go long into that situation there. You want a Derek's discount over here. Look at this guy. Ideal one is right there, because if it fails on you, it comes back to you, you can get out, or your stop loss is real close. So you're between here now and here with a reversal. That right to rejection block. So we haven't taken out a swing point. So whatever this is here, that fair value gap there, you want to see this one, hold price right there. We're going to put one in here just as a potential perfect entry. So the mean threshold is holding. Mean threshold to mean threshold. Keep in mind this one down here. If we lose this, then it's bearish again into here. I want to see a nice reaction off of this now. I want to see that come back through here now. And it did. So once it taps that, you want to see a nice reaction off of it. You don't want to see it come back down in there. It's done its thing. If it starts coming through it again, then I'm not willing to risk that this isn't the next objective. So if it rolls off and takes off on me again, no. The wick got me. It's a zero stress trade. Yeah, you shouldn't see that. As soon as you see it tap it, that should be it. Start moving now. Get through this candle. And it just did not attempt. So now we've traded below it. Here's your opportunity to get out. Right there. So you would have broke even with me as well. Because now we've got a reverse. Now we've got the direction that I'm heading down. I give you an opportunity to get short. Right there. Anywhere inside this one here. Even though we didn't take out a high. It is now an inversion. So it is giving us intent to go lower. Look for here now. And then once you get back into this, then you're looking for, I'm thinking that if we don't blow through that with some intention, then we could be just rolling around, coming back up into this whole range again. And Mr. Carrot here is on the sidelines, not knowing which way to go. Derek says I enter 17,404 to go short. You going short, Derek? 17,343. I had a limit order there, but canceled it in the middle of fair value gap order, block 5 minute. That would have been optimum trade entry. I was using main threshold of the fair value gap. Maybe I will get another chance. It looks like it's coming back down to retest. So fail safe would save you right there. That's that perfect entry that if it trades against you, comes back in, gives you an opportunity to get out and neutralize your trade and wait for a new setup. It's got to be a significant low to take out. I'm seeing this pattern over and over again where you don't see something significant on this side, not just this guy here, but it's got to take something on the opposing side going up for this to be more valid. See what I'm saying? Like this is the opposing side coming down. That's it going back up, taking it out. come back inside, fill it for higher. So there's the full fill of that now. I got nothing in there. Gap here, the 5 minute. Mm-hmm. 5 minute one's beautiful right there. See how this one candle here on the 5 minute? See how you get your reversal here and here? And this one candle takes out both of them. Then you trade to the second one. As soon as it comes back inside that second one, look at that, right to a nice perfect entry to go short. Back to a discount array. Or if you're pushing for lower prices, equal lows, mean threshold. You want to see it close below here. Then you're waiting for this swing point to happen to catch a run back up into here. Because this array was never caught. You see how the second one was, but the first one wasn't. That leaves it open for a chance for running back up into here later. So look for a swing to happen either below these lows or these lows, coming back into the range, aiming for this inversion right there. The bias is still low. Still aiming for down here. Channel 3 rejection block. Yes. Good call, Derek. 1 a.m. Mac, 11 a.m. macro. Ah. We have 4 minutes to start getting below here. If we take this low out, this would be the 40%. Oh, let's have a look at that. Let's engineer this here. I got an idea. Let's see if it pans out. Yeah, we're still sitting inside this inversion here now. So the bodies are respecting that. I want to see it push through this mean threshold here, get into your rejection block, just clean out these lows here, and turtle soup this at 11 o'clock. One more minute. What you gonna do? Give me a nice bold candle down here with a reversal. Bodies are still respecting that thing. Bonjour, Monsieur Warrior, Workout Warrior. Wow, look at that. Trying to knock on the door and said, nope, I'm not going to give you the breaker. Very strong breaker. That breaker was really strong. Would not let you have anything more than the body. And that breaker supported by fair value gap. Now you want to eat through this one, come back, find some support at it, push higher for this range, internal range here. Blue here now. No, that's going to be my main threshold right there. I'm trading off the breaker, so that's my breaker. It's got to be my line in the sand. So if I lose the mean threshold of that on a close, I have to close it out before it runs back into here. So that's going to be my fail safe right there. Stop loss is below the low of that. I want to see that breaker hold price now and start pushing higher. So the mean threshold is my line in the sand. And now that it's run all the way up there, I'm going to move that right up into here. Pay for this trade, let it continue on. Comes back and takes me out. I just want to see this leave now. It doesn't need to, there's no reason for it to come back in there. Get back up to this order block here, which is a breaker. Now, are we going to come back into here, or are we just going to keep pushing through this? If that's a swing, mitigation. Right off the mean threshold. I think it wants to come back in here one more time. I was really high in that array. That's why I pull my stop loss up tight, and we're hitting this candle up top here. So I'm like, you're inside this inversion again. So that's why I pull it tight and go. I don't care if it taps me out. I just want to make sure that it gets through that and then snapping back. Not a good place. So we're potentially coming back into this. Now that we've run this low out, we have a body that traded above here. We could come dipping right back into that fair value gap one more time. Back into this breaker. Now leave. Let's watch the mean threshold of this candle here. That's where I originally had my fail safe, right? So if it starts to come back inside retracement here, I want to see it leave here now. This would be nice if it stayed open. See how we're back to that order block there? You validated it here, all the way through it. We're coming back, just tapping it. You got to start pushing through now. You want this to hold, go higher. Next price leg up. You pretty much take that from here to here, I suppose. That'll fill that fair value gap above you there. Valid. Mean threshold, you want to see a whole price. Body's holding it good. Snap off and go. This one's been worked multiple times now. It's been eaten through, so it's no longer valid to me. I'd be looking for this guy up here. See between this one and that one. Are you getting one opportunity to get in here or not? You want to see this hold? We're in a small little range here right now. Consolidate, consolidate. If you lose the mean threshold there, look for a run back into here. Good man. Keep your stop loss at break even, man. Yeah, I agree. It's such a choppy little thing in there right now. Mean threshold is still holding, which is nice. See how that mean threshold's holding price right there. Keep pushing. Keep going higher. Nat gas moves a little. Did nat gas eventually move up for you? Did it give, when you were mucking around with that spot there? 614, 611, I think was the lowest. So you're still above that. The body has respected it. Your stop loss. Ooh, that stop loss was close to getting taken. You snapped off of it, pulled above it. That's good. Wicks do the damage. They did not take out your stop loss though. And up you go. Yeah, that's still a run. Back to the order block. That gives you your buffer. There's your little bit of padding on that trade. Your padding is right there. You come back inside it. You want to stay inside this now. There's no reason it should come back down in there. So my stop loss mean threat, or my fail safe would be right there. If I see that close below that, come back into it, then I'm out. Just because this has already done the damage it needs to do. That should be the swing. That should be the support for that run up above. And you did take that old high, so that's now become a breaker. Right there, there's a slight pip above, so that one becomes the breaker. So if you lose the mean threshold on that, then the chances are you're going to keep coming back down. Ideally, you want to get above this to get extra padding on that one. You want to see the body get above that right there, and then continue pushing higher for these relative equal highs for nat gas. Yes, okay, we finally got that one taken out. Excellent. Still looking for our price leg to finish off up here. $9.30 candle, 5-minute was a beautiful reversal, and it got respected beautifully on the 1 minute. The 5-minute reversal, all right here. The reversal, 5-minute one, I didn't see it get respected there at all. Yeah, I don't know which one you're looking at there. Weekend Warrior or Workout Warrior. I don't know what. There's your reversal right there. And it didn't even come back into it here. But the 1 minute, this right here definitely felt right back inside this again. You see that? Reprice, rebalance, all the way back in, fill it, all the way back in again on the top of it. Supported with this, hard one to call. So we got into rejection block here. Hold, hold. Otherwise, we're in that premium range. Roll over for a discount. Like, you can't leave this one as ignored. Like, you've run up into a premium area inside this range here, and you've hit the rejection block. And if it fails off the rejection block, comes all the way back in, people get frustrated because they're looking for this price leg up higher for sure. That's my guarantee. There's tons of PD arrays you're running through and ignoring, hoping it goes there. Keep your eye on each candle. This candle here now has been validated to the downside. The body, it just came back up, hit it, and now you're between this candle here and that candle there. And see how you've hit the body here? Body, body, premium, discount inside that small little range. That one candle's tapping both of them. So now it's got to make a decision. Is it going to go higher? Break through the mean threshold of this. Is it going to go lower? Break through the mean threshold of that. This is where you're watching it now. This is why it's important to watch price action every minute candle. See, like that, right on that mean threshold. And it closed right on it. So either you're going to come down to this guy, or you're just going to continue chewing through this guy here to the upside in that small range. That candle, that candle. This one's not valid. That one's not valid. Neither is this one. Those three aren't yet. You want to see this one here get validated above with a bold candle. Then you can start looking at these two as support. Until then, mean threshold to mean threshold. There's your mean threshold of that candle. Like array to like array. See, this one's bang. Those were the two they had to decide to get through. The algorithm says this one's going to hold price. That PD array on your, when you're running for old highs, rejection block, held price, getting down to a discount array here, so you can't leave that one untouched. So now we're just visiting it now. You're rating it right there. Pull your fib tool from top to bottom. 50%, 62%. Fill that fair value gap right there. Now you may say 62% is all I need to go long. You do not want to see it close below this. You can see a wick come down there into this. So that's your last line in the sand to go long. See, it's swing. Again, did not take out a significant swing on the other side. Just this little guy here. We have no reversal happening up there. So this is the one where you look for it. It's got to get below this, come back into it, and a body getting below here. So we've got these two overlapping, one to support going lower, one to support going higher. They're overlapping one another. It's up to you to decide what you want to reach for. Lots of equal lows sitting here, tons of liquidity sitting right below you here, and there's lots of liquidity sitting above you. You're in a discount inside this consolidation right now. So are you just trading CAM model 1 entry for a run back up to another consolidation above you? If you can argue both sides, ask yourself where you want to be. Derek, you still in this, buddy? I hope you're still in this. I hope you got your stop loss kissed and then took you to the prom over here. $9.30 candle. He says the 9.30 candle is the 5-minute candle. Ah, 9.30. Oh yeah, I see what you mean. Like come down here, find some support, run back up. Yeah, I got you now. Warrior, I got you. All right. Body drakes below it. See that pop below it? So now you're going, now I'm more bearish than I am bullish. And I was bullish here. It came back to the breaker. You got an opportunity to catch a rejection block. Pay yourself. It's why you got to pay yourself at rejection blocks, folks. Now it comes back in, puts you under a squeeze. So I'm glad I got out when I did up there. Now you've got all the way back there, and we're just touching or almost touching that long. So short, trades above it, long. See how it breaks it to the upside and said, nope, I'm just coming down to fill this guy. I want to run back up through this, gives me bullish. Stay up above this one, it gets me more bullish again. So you got like a double bullish. This one, you broke to the upside, so now you go, I'm going in that direction. This one here breaks above it, comes back, finds some support at it. That'll be another continuation to pushing for higher prices again. But see how it come all the way down to that fair value gap. Once again, reclaimed multiple times, reclaimed. We did not trade all the way through it and back into it. So this is just a reclaimed fair value gap. It's pretty much balanced, as it were. But it's not, to me, it doesn't move into a senior array category. It's just a fair value gap, as it were, right there. So now we got a body above that. So like a double reinforced for a long. So looking for old highs up here. As soon as that body closes above that, if it closes above that, back to that order block breaker. See how you just, here's your breaker. You ran off of this, took this low out. Now you got to go to which breaker here ran up above these old highs. This last down close candle. So if we run all the way back down to breaker inside this big range here, then we're back to bearishness again. Inside consolidations, you'll see it switches up, switches directions, just running inside the range. So if you're looking at a consolidation, you trade from outer PD array to outer PD array, and all the little range inside there is where you want to catch the discount or premium to discount, discount to premium inside the consolidation. So look for your outside arrays and see where your price is sitting at the time. What's going to influence going long or short? Long or short. You got two longs against one short, and you're already trading above that. You've come back, found support at it right there. So this little thing becomes an inversion now. Right here, see that? You traded through it. You came back through it again, found support at it. Now you're pushing up higher. You threw a body on this one. So now you got this guy here. Find support at it, push higher, eat through this breaker, run for these equal highs. That's where you're kind of watching as this unfolds here. And you're inside this range here. So what have we got left? We've got this order block here and this one right here. So we're digging into this one now. And then you've got this one has now been validated. A wick is above. And we've got support right here. So we expect to see this start to get eaten through right now. He's digging into it now, you see? There's your mean threshold, trying to hold price. It's a breaker, so you go, oh, breakers are always hold price, right? Guaranteed. No, when you've got support to go higher, support broken to go lower, then support broken to go higher and higher, two higher against one lower inside a small range. I'm expecting this to finally give way. This would be the laddering effect. You see how you got the body breaks above here, comes back, finds support at it inside a level now that becomes the inversion. And now you expect to see this one provide support off of this little inversion here. So we'll put another little, oops. There's the mean threshold. Back to the candle's body. Mean threshold holds. It wants to come back into a smaller range again. So here's where you start to get this compression starting to happen. So here, down close candles, that one. We want this one to provide a level of support. It's inside a 50% puts you right here. So mean threshold of that candle would be the discount inside that little range to push higher. You're in the mean threshold or consequent encroachment of the inversion. Hit it. You want to see that drive up higher now. It doesn't need to get down into the discount array. It just needs to find support off of here, push higher, get through this mean threshold here again. You've already eaten through it once. I kind of look at it, liken it to, you're starting to smash into it. It's a breaker, so yeah, it's strong. So you hammer on it a few times until you finally bust through and get to the other side. Because all we have here is mitigation. We've tried to get up there, it didn't work. Try to get up there, it didn't work. Try to get up there, it didn't work. This guy's really giving us some knocking on heaven's door here. If you like what we're doing here, hit your like button. That lets me know that you're finding some value in what we're doing here. It doesn't cost you anything. Just a mere finger click. If you're new, you watch out that we're here every day. You're more than welcome to pop in and or subscribe to our channel. We are available after hours as well on the Telegram channel. You'll see that in the link in the description above. And we're finally running for the high. So you can see how these levels provide the level of support we're looking for. Knocking on the door, driving through it. Now we're finally reaching for our high. Come on up for the carrot. See how you're breaking out of this range here now? You're finding support. It's telling you when it's changing its mind, Okay, now we're finding some support. Cleaning out the old high. So again, once you start cleaning out significant highs back into a bigger range, then you start asking yourself, what's the likelihood that I'm going to this 11 o'clock run back into 65% of that range? Or 62%. I don't know why I keep saying 65, 62%. There's 62. Off this order block. Finish the price leg off. Just give me the price leg finished. It'd be funny if that's it. Bodies are respecting the 62%, and now we start hammering down. We finish off the rest of this rundown for the day. So you just look for a swing point here now to support a continuation on the downside. Or if we're running back into that fair value gap above us here, then this breaker here should provide a level of support that we come back to. So mark out your breaker. Let's see what kind of support you get off that guy. Ooh, nearly. Look at that. 62% on the run. So now we have a swing point that we're looking for. If this closes below this, it's nice. It's already eaten all through that breaker, all in one candle. So I don't even like that anymore. So now you look for the swing. Continuation on the downside. It's like we're telling it what to do, hey? You're saying, all right, it's okay now. You can continue down. Once you've done 65% or 62% of that range, between 11 o'clock and that whole range that occurred between, it's usually between 10 and here. Not that range. It's usually between the 9:30 open and the 10 o'clock or 11 o'clock range. So all it did was just come back. This is why I was looking for this to run below these lows, and it didn't do it. So now it's finally pushed up to the 62%. Body's finally trading below it here. And see how we ate all the way through that one candle? That means your ass is next. That takes all those PDRAs out with one candle. Then she's going down. So here's the breaker. See how we can't get in on it here? Look right here. If we have a body trade below this, come back up, find some support off of this. And that one will be my my line in the sand again. See that? Now you want to get in on that. Stop loss will go just above here. We were calling for this. We just looked for an opportunity to get it. It's not giving it to us. It told us that we're going to, it slammed through all those PD arrays and that breaker right off the bat, which is really nice to see. Giving you a hint that we're not going to go higher. We're going lower. Now a nice little return to this guy would be nice for a short before we take out these lows. And we've already hit the one PD array already, so we're getting back into this again. So like array to like array. See how the body trades below here? Trade back up into it, get some support at it. You just need to come to the mean threshold to give me a little bit of love. Give me a ride to the prom. So now you're bearish. Despite all the stuff that's going on here, you're bearish. It's tipped its hat. So if we take this low out and create a fair value gap, then you're back into that. Okay, we could be coming back into this range here right now. So there's the breaker. Well, that's all I want there now. I don't want to see that running up too much higher. That'll be there right to the top of that fair value gap there, or give it a little bit of extra room inside here. No, I don't want to see any more than that. Take a 2-minute breaker. Ugh, technically I should be above this, but there, that's the fill. Okay, you're coming back into the range. You take that 2-minute breaker all the way up to here. So I'm just gonna make a mental note of this as the 2-minute one and not the 1-minute one. If we close above that, then I don't feel so bad about getting taken out down there. Swing, body takes out this low high here, so we're looking for a higher run into this range. See that? So when you're looking at discount premium array, it's running up to a premium array. Unless it breaks below this low here, comes back into it. Array up here now. Just that's the little the hint that says, guess what? I'm going higher. Would have taken me out anyway, even if I went to that high. So I'm kind of glad it took me out down there. So why didn't this breaker hold? It tends to be, I'm thinking it tends to be when you get these big ranges come down and you've already finished this low over here and you drop below and you come into this, as opposed to trying to work breakers on the way down, instead of having these ones that are on the other side that finish up and you drop below it and you come back into them with some sense of, like if this was all coming down here, went back up, broke out an old high, then traded through it, and then that this was all from a downside run and it's a further continuation on the downside run, And this, so in other words, you'd have to see this one taken out to come back into that versus this long trending line here. I think that's how you have to be more supportive of a breaker in that run. So that says, yes, we're going higher into the range. So you're looking at this breaker here to hold price now. And that swing reversal, there's your swing reversal chance to hop in for a short. Ideal one is right here. If it trades above you, comes back, finds support. We're looking for further upside. So that will be the ideal entry. Actually, you're between this one here and this one here. We've swung below, swung below. Not a significant low though. I can argue both sides now. Better stay out. Oh, you're welcome, Derek. Have a great day, buddy. All the best. Hope you have a safe day. It was fun at the shop. I'm going to get out and have a nice walk again today. I'll wait till lunchtime on this. What's these other guys doing? Running around waiting to find some action on that. We have a swing. Did not take you out. Taking a low swing. That would have taken you out there. Okay, let's see this one. See how this, you got a reversal here, takes that little high out, reversal. You can't get into it, so you look for the breaker, body trades below it, you get inside the breaker, take out the lows. Almost took out this low, but that's where your first objective would be. Then you want to see this get above this high. It does, and then you want to see it return back into this candle here. And it hasn't hit it yet. Hasn't hit it. Well, we'll look back into this candle. This one takes out these with that candle's wick. Body trades above it, comes back into it here, runs up to breaker here. It takes out this low. Mean threshold. I don't see anything in here other than just this fair value gap here and off that breaker. What's nat gas doing? Are you getting anything out of nat gas? Well, you're still climbing. You're still climbing out of it. I don't know what that pays you, Christoph, but you got to get on top of this here, though. And then you would have caught a nice little swing. But don't forget, this is relative equal lows here now. So if you're inside this range, aim for your breaker. Yeah, aim for your breaker right here on the upside, and that reversal on the downside that took out that high. There's your reversal. Reversal to reversal. Pay yourself here. Leave a piece on to see if it'll go through. Keep your stop loss running up behind it, nice and snug. And you'll make a nice little daily range out of that on a 15-minute from here to here. I don't know how much that would have paid you, but that's your run for the day. Well, what my run for the day would be. Oil. What are the banks up to? They're still diving down. Yes, yes, yes. Did we get our little soybeans? Soybeans came back to here's what we're looking for a run back up. So that's working out. This is running into here. And what else did we say? Sugar, we wanted sugar to go down. It just came down to the bottom of that. It's in its little consolidation. Live cattle, what do we say? Live cattle was going to go down or go back up? Banged off through here, run down. Don't know. This is one we said would go down, and she's going down so far. From there. Okay, well, we're still coming down, so that one's working out. Lumber's still coming down. Lean hogs, we said was coming. We said was coming down. Open today. I can't remember what I said. I have to check on that one. Bitcoin. What's Bitcoin up to? Oof. Ooh, that looks like it's we lose the meat threshold of that candle. Ooh, growly tummy. See, we traded above all of this back into this breaker. Getting a reaction off it. You got a reversal happening here inside it. Body broke above, come back down. Body broke below it again. Downside, come back up, find some support at this, continue pushing through here, running back into this range here, looking for an old high and here. So that's what I'm looking for on Bitcoin. Again, nothing super clean. And back to the grind. Swing. You come up inside it right here. That's what we're looking for, a reversal. Now you need to continue down. All this chop going on here. Now you've come back and filled the fair value gap with a perfect entry right here. If that's your perfect entry for a short, I would bring my stop loss right to that and say you don't need to come up here and visit here again. So that would be safe, or I'd put a little bit into profit just in here, and I would let that sit there now as a zero stress trade. And you want this, you're not mucking about no more. See how the body's traded below it here? You want to see that continue pushing hard now down. Get through these inversions in the discount side of that whole range. See if I pull my fib tool from the bottom to the top here. See how this is below 50? These are all in the discount arrays. The premium array has been hit. Now you want to drive down to discount array, back over here. Please hit the like button, family. It helps Darren out very much. Thank you very much, Tommy. Appreciate it. Market maker buy model. Buy model? Oh my God, my stomach's just bubbling away here. Market maker buy. On a which time frame are you talking about there, TP, for market maker buy model? I'm feeling more discounty right now than I am looking for a premium. I want to see this giveaway right here. You're between this one here and this one here. Inside that range. Overall range, you've got lots of premiums been hit. You want to start really dig down in here now. That stop loss, I'd be dragging that sucker right down into some profit right now. There you go. Come on down. My friend MF, I just see market maker X model from 10 to 11 on the 1 minute. Now it's boring accumulation. Maybe will continue throughout lunch. Let's see. You're on the 1 minute buy model. I don't see a buy model here. So far, we've got support on a downside run from here. You want to see this candle get eaten through now? It's a mitigation block, so it shouldn't give too much resistance. See how we came all the way into the mean threshold of it once? Chewed all the way through it. Come back up, find some support at this order block here. I expect that this order block will hopefully hold price. And now we're below this. See how the body close below that inversion now? Trade back up inside the inversion in that order block. Expect it to provide some support. Start chewing through this some more. And start running down into these lower lows. A battle begins between mitigation and standard old order block. I guess it's a swing. I think this one technically is the stronger one of the two. Now this fair value gap here on the 5 minute, this one right here, we come into it multiple times here now. We have no swing happening on the upside. That's the mean threshold of that candle. This one's mitigations overpowering basic block. Back to here now. Smaller range. If this one gets validated here, which it just did, you got this big one and that little one there. So now if you start taking out these highs, it gets promoted to senior candle. And now we're running above this with a body. Now it becomes a breaker. It just got promoted. It took out highs. Now it becomes a senior array. Now you're looking for more. Now you got to switch your mindset here because you've broken this inversion now. So we didn't get further downside prices. We broke to the upside. We expect this to give us a level of support now. How do we tap off of it? Do we just touch it and go? Do we just eat all the way through it again and start getting to the other side of this and we into that consolidation? I don't think we're going to just ignore it. Eat through 3 of them. Just a stop run, back to a breaker. And it is eating through it. Just a run back to this breaker. Mitigation, breaker, now run through it. Just took up all those people who wanted to go short here. These people who wanted to go long, ran, took those guys out, those guys who want to go short. And we've eaten all the way through that breaker now. Support at the mean threshold. Right in here. See if that holds price. We are traded above it, and then we traded below it. So now you want to see this continue on the downside. This has been valid, so you want to see the mean threshold hold here. See how this consolidation can really beat the crap out of you? And we're already through the mean threshold of this breaker here. I'm going to keep running back and forth. Welcome to lunch hour. About to start. You're inside this range here still, between here and here. And that one just completely overlap each other and ran right through them. So you're still in this larger range here. That whole linchpin there, so you got discount and premium inside this range. Discount array was taken, then taken again, and you're up into the premium range now, the premium array. So you're really between here, and right now we'll hold this one up here. I guess you could put it to that little one right there. See that range? Discount array, premium array. The bodies are respecting the mean, the middle. Working that one right through. So I guess all you got left to work is this one here. Are we going to climb on top of this, get some support at it, or are you just going to bang around inside here for lunch hour, inside this range, just taking out the lows, cleaning up the highs, because then you've got a lower array and this higher array here. So you're inside this range is these two. Inside the larger range, it's between here and here. So just watch how price bounces around between these inside the ranges, between the premium and discount senior arrays. Fair value gaps are more senior than just basic order blocks. Let's see how they work them. You see how these mean thresholds support price. Midpoint, midpoint, order block, first array, second, third, midpoint. Come back up to this one again, just tap off of it. You want to see a body get above here now and start eating through the mean threshold of this to get higher into upper part of the bigger range you're in here. It's been bumpy for sure. There's been other assets that have given you much more cleaner entries for sure. So it's just got that whole reversal in here. Come down inside it again here. Inside that whole big range. I guess that price leg is sure taking its time getting done. If it comes to this, that price leg will be completed. What was we drawn off of? That should be it by there. It's the price leg completed right there. This one from there to there, that one from there to there. What do we have this drawn up here for then? Why was that one up there? You guys remember why that one was there? Because this is the price leg that was just finished here. Oh, do we have it sitting up here like this? Nope. I'm just trying to think of where we would have drawn it from. But that price leg from there to there is that one from there to there. I don't know why that was there now. But it's hit it. Whatever it was, it's hit it. Fill that fair value gap down there. You're up into the premium portion of the larger range now. You start to miss these little candles, hey, Timo? You start to appreciate a pretty candle in your house. When your wife's now going to burn candles in the house, you can have a new appreciation for that candle. Hans, like, have a nice walk, Darren. Not heading out yet, Hans. I'll be out there shortly. Looks like a nice day out there. What's our temperature going to be? It's 9 degrees right now. Woo. That's Canadian sun tanning weather out there today. Oh, it's 13 degrees right now. Going up to 16 degrees today. My goodness, it's like going for a swim in the river. Gold. Have nice clear reversals, yeah. Gold, 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 and Bitcoin. Look at that Bitcoin, lovely Bitcoin reversal. If you weren't sure about it and you wanted the breaker, the breaker here that takes out these lows. Trade above it. If you've caught this one here, trade above it, back inside this one here. Oh no, we're going to look for this one here. trade above here, come back, find support at it here. This breaker taking out these lows. Body trades above it here. You trade back inside it here. And again here. Continue to the upside. Gold. Where do we say gold was? This is silver. Silver's reversal right here. You come back into it. Perfect entry for a short right there. Running back down into the range, or this breaker here. Run down into the breaker. Nice. So silver was a nice little reversal there over the last few minutes, or last hour or so. And then gold. Let's look, see what gold was doing today. Gold got you a reversal. I don't usually count this side as the reversal side. This is the break in market structure to the downside, come back up inside the fair value gap, and a breaker inside the fair value gap. That's your money shot. That's not the reversal, but that is certainly the 2022 model, I think it is. When you break this little low, body runs back through it, right into this breaker, fair value gap, money shot right there. If you wait for this reversal here and then this mitigation block to get traded to, so the body breaks below it here and eventually comes back into it right there, and then you get short. Looking for this reversal and you didn't get a chance to get it, and the body breaks below here, which it does right here. It takes all this time to trade back up into it right there to go short. Reversal. Body breaks through it here, trades back into it. Get yourself out, because if you're going long there, you just got your butt taken. Your stop loss is still safe, but now you get your opportunity to get out because you're going short still. Looking for further downside into this wick. So until you see a significant reversal here, still short on gold. That's our Japanese yen still going. New Zealand dollars, that improved. Canadian dollar. It's in limbo. Euro dollar. Well, now we're making some cash. Going long on that for the daily. Off this reversal here. Going long. I still want it to get back up into here, so I'm a little long on euro right now. GBP. So not a swing. They clear on a low. And see how the body trades below this? This is where it would have thrown me out of the trade on a 1 minute chart. And then you wait for it to break above here again. So if it breaks, body breaks above it again, comes back inside it. This time you can get long. So if it does not continue to take out the mean threshold of that candle, if that's your wiggle room between here, if that's your reversal, And this confirms that we're going in that upward direction. And it comes all the way down, fills you right here, and then trades below you, and you go, ugh, it traded through me. My stop loss is here. It trades back up, gives you an opportunity to get out, move to the sidelines, and wait for a better entry. So you're going to wait because now you're saying, okay, it's going down. Oh, wait a second. Oh, great. Now it's traded back up through it right here. Good. Now, 1, 2, 3 entries I can get in to go long again. I'll try that same trade again. I broke even here, so I haven't lost anything. I'll try the trade one more time. You come all the way back to a perfect entry right there. And now you catch the long. But again, you got to have confidence to know that when this is changing directions and you get out and then it reverses on you, that you see this break on the upside and you go, okay, now I can get, I'll try it one more time in these 3 entry points to go long. Or if you're not sure, you're just going to say, well, you know what, when it finally takes out the breaker here on the upside, which it did here, if it takes this upside out again, then I will consider going long on this. Not this spot, but when that high gets taken out, which it does right here, it gets taken out there, closes above it, and you go, great. If it comes back to this high, I'm going to get a short or long here now. So it comes back, taps it, and then you go in there. So there's multiple different ways you can attack this reversal, getting more confident on, am I just going to get beat up in here over and over again like we were seeing it previously, getting this worked on inside a consolidation. You say, I don't want to wait, I don't want to get bashed around inside a consolidation. If that eye gets taken out, then I will take the trade. And it does, good. If it comes back to it, then I'm long, continue to the long to the upside, aiming for your upside arrays and the ones that supported the reversal. So this one supports the reversal. There's one right here. Oof, man. One right there and one right here. So if those are your upside, and that's in a premium portion of this long run up, and you've just got in here, you can either pull your fib tool from here to here and work this like this. Pull your fib tool, and as soon as you entered in off that perfect entry right there, and you say, as soon as it gets to 50%, I'm taking some profits, moving to break even. Gets to 62, I'm moving to 50. Comes back, takes you out. Price done. You're out of there. Then all of a sudden it comes all the way back to start your trade all over again right there. If it comes back, which time should take out in the morning, high or low, you get that trade to do all over again. So you've buffered all this. You've got a chance to take all that. It comes all the way back to you here. And you go, oh, look, it's taken out these significant swings. And I've got a swing point here. So if it trades above it and trades back into it, right here, I'm going to go long. I'm aiming for here and this breaker above me. You hit the breaker, you hit the here and here, and you hit the breaker off that trade right there. You've collected some more handles, and if it comes back to you one more time, you get to do it all over again. Stop loss is sitting here, so you've buffered all of this. You got to buffer all this. You ran all the way up into here, collecting your 65%. So you maximized your profits in here. The reversal confirms that we're back to here again one more time. You're aiming for inside this range here. You've come back, you've got an opportunity to get in long again. Now you start running for this high, or that rejection block, that high, breaker, mean threshold, equal highs, and then back into this guy over here. And your stop loss is still sitting there. If you take that high, then you start going, all right, well, now I'm, like for this one here, when you got back in here, as soon as it takes those highs, you're paying yourself. And your stop loss is trailing up behind you. Either using your fib tool again or your PD arrays or whatever techniques you want to use. So that British pound is an interesting one today. So we finally cleared up this order block here. Highest order block candle body. See how the body respects it? The wicks grab it. There's no swing point in here. So, because it's so choppy. Bitcoin. Ooh, look at Bitcoin. It did continue down on the downside. Off of here, you don't get a chance to get that one. You get a chance to take this breaker right here. That last down close candle before it ran out that high. Right there. It trades below it here, trades back to it right here, and you're short to here. You're paying yourself there, and then you're starting to look for these old highs back here. $16 is 60 degrees. That's short weather. Yes, it is. TikTok or Tuk, thanks for today as well. I'll see you tomorrow. It's 1 a.m. in South Korea. I gotta sleep. Oh, poor guy. Yeah, go get some sleep there. Tuk at 1:30 in the morning. I appreciate you staying up as late as you have, my friend. I hope you get some sleep. I'll see you tomorrow evening on your time, I guess. That's a long day for you. I really appreciate people sticking around. I got 671 people in here. That's amazing. And they're all over the world, and people are willing to stay up till 1 o'clock in the morning. There's all these people out there you can watch, and I'm quite honored that people take the time to spend time with us here today. That's awesome. I don't care if I get like 600,000 people, would be awesome, but 600 people, like we're getting them one at a time. I totally respect that. I really appreciate you guys turning out. I really do. So thank you for that. Anybody else? Is there how's natural gas doing? How's our boy over there in natural gas? Natural gas. Well, he's still above this. I'd move my sucker right up into break even now. I wouldn't even mess with this. I'd have zero stress trade going on here, or maybe some profits. If you're in here and you got some profits, slam it right in here. Make yourself a little couple of bucks and take your stress off your trade. Aim for up here. If you get it, great. You want to see this candle start to blow through the middle. I have already mentioned this several times now. We want to see that. We're starting to see the candles closing up above it, or getting close to closing up above it. So you want to see this one just come back, tap that order block right there, like it's just doing now. It can come into the body and then start to really, the next 15-minute candle start to work up above here. And you may have caught yourself a doozy of a trade there. But remember, you got relative equal lows here. Look at these equal lows here, bodies. Range. Discount of the discount. Ran back up into the premium. Cleaned out some highs here. Or made relative equal highs. There's going to be lots of liquidity sitting in here. If this holds, look for a run back up into here. Like they've engineered some liquidity below you here. And now they're engineering some liquidity above you inside that range with a pocket that has yet to be balanced. Got a pocket here, a pocket here. Dixie Doodle, come on down. Finally, we got a body below that low. There's some 15-minute confirmation that we've got some more downside coming. Not yet on the hourly. Here's your confirmation on your 1-minute clock. There's your swing high. That's your gap that occurred at 11 o'clock. 11 o'clock, that's that reversal back into the range that was created. It's not the same though. Not there. 11 o'clock, you get this reversal. You have this one here, or yeah, this could be the breaker, the big beefy candle here, or this little guy here. Either one of them you could take. Body breaks below it right here, so you do get an opportunity to get in short there. Reverses back into it one more time, you get an opportunity to continue going inside that breaker. Continue going down. Gap to gap, premium discount, like array to like array. If that's what you're aiming for, you get that fill right there. Reverse, you come back into it. You take the high. You don't even get a chance to get back into it though. Yeah, you don't. So you just run straight up to the high. Reverse. Come back inside it here. Take out the lows. Oops. Take out the lows right there. There's a swing there, taking out these lows. Draw across. Body grows above them, comes back inside them. Give your mean threshold the wiggle room. Stop loss would have been taken right there. So wait. Wait for that to get cleaned out again on the body. Yeah, I don't know about that one. It's kind of choppy. Mini S&P, look at that. Where do we get some action here? Reprice, rebalance. You gotta be a sharp eye to catch the reprice, rebalance here. The body closes above it and literally gap down and took you in to go longer for the day. Like, wow, you gotta be really steely-eyed to catch that one. Lows taken, body closes above it, runs up. You can say, now I need the breaker. If I were trade back to the breaker, as soon as you get a body trade above this, which is right here, trade back into it multiple times, running out highs. It comes back, gives you another opportunity to get in off that breaker, start going up higher. It gives you one more opportunity, a couple more opportunities here, and then you don't get, that's it. You don't get any more. Wow. All right. Well, I think that's going to be it for me, folks. You're right about gold. Much respect. Thanks for today, Darren. Well, I'll see you tomorrow. Day. Lap, you were right about gold. Much respect. Okay, good. So we're just digging back into this fair value gap now. I want to see what are we going to do in here. This is the linchpin for higher or lower prices for me. Where that closes today is important. So keep your eye on that. Look for the afternoon special. I think Derek's out for this afternoon. I'm going to go for a walk, straighten out my legs a little bit. I'm waiting for a phone call. So I will see you guys tomorrow. It is Friday. We'll see if we can get a TGIF Friday trade here. I don't know if we're going to get much of a TGIF Friday. 1, 2, 3, 4. No, we're not. So tomorrow's going to be the interesting play off of that fair value gap there. That daily fair value gap. And then I can clear out all these things here. Remove all the drawings. So keep your powder dry, folks. We're going to wait for cleaner. Salad days are coming now. So we're going to catch some nice doozy runs. So enjoy your time. It's been an interesting week. Lots of ups and downs, lots of swing points. We're promising a crazy week, and we have got our crazy week. We've got a swing high, swing low, swing high. So we've got multiple different 1, 2, 3, 4. There's the what is that one? 15, 18 today. Yesterday's 18 reversal, 19 reversal, and then Monday expect another swing point. So either Monday's going to be a swing down here, or Monday's going to be a swing up here. Yeah, Monday. Keep your eyes on Monday. That's where my speculation is. Where my ideas are for Monday. Anyway, I will see you guys tomorrow, and all the best. Have a safe day. Get out there, enjoy yourself, meet some people, hug some people, pet a pet, go for a walk, love your wife, hug a friend, hug a fireman. Take care of yourselves out there, and I'll see you guys tomorrow.